Shout out to the traders in our group that booked a 500% gain on Friday with the AMD call options in the first hour of trading. This video will talk about that trading strategy and how you can use it to trade the SPY going forward into the week ahead and what we'll be looking for. Hey there traders, you're looking at a chart of the S&P 500, otherwise known as the SPY ETF. Now, it recently attained an unprecedented all-time high, marking a significant milestone in market dynamics. However, the subsequent decline observed on Friday was notable, accompanied by heightened trading activity as indicated by the substantial volume of 86.5 million shares, representing an 11% increase from the average. This market movement resulted in the formation of a bearish engulfing candlestick pattern on the daily time frame. Concurrently, the weekly chart revealed the presence of a red doji, suggesting potential uncertainty in the market outlook. It's worth delving into some technical indicators for a more comprehensive analysis. Despite the emergence of a negative divergence between price and relative strength, the RSI 14 indicates that there is still room for an upward move. Closing at 62.91 on Friday, the RSI 14 retreated from its previous peak above 70 on February 12th. On the other hand, on-balance volume is exhibiting a turnover, indicating a potential shift in short-term momentum. Additionally, accumulation and distribution is diverging from price, a phenomenon that often precedes periods of consolidation or short-term pullbacks in price. These nuanced indicators collectively offer insights into the underlying market dynamics and potential scenarios. In our trading strategy for the SPY tomorrow, we aim to identify an oversold bounce, targeting approximately 514.40. At this junction, we plan to acquire the March 15th 512 puts with our stop loss just over the 514.90 level. We'll be looking for the 20-day moving average beginning to converge with the 50 moving average on a 2-minute chart. And to continue our short-term bias, we want the 20, 50, and 200-day moving averages all trending lower to add to our position. Conversely, we will only want to take long trades when the 20, 50, and 200-day moving averages are all pointing higher on a 5-minute chart. We initiate this position in our own accounts. To get our options trades as we place them in real time, visit patreon.com/soartrades to join us. Now, the recent doji pattern on the weekly chart for SPY indicates indecision and potential for a pause or reversal in the uptrend. Some analysts might be cautious about the SPY's performance next week due to the doji formation and potential profit taking after the recent gains. The significance of any closing price surpassing the 5,200 mark cannot be understated, as it would effectively invalidate the bearish engulfing candle observed in Friday's trading session. Additionally, it is essential to take note of an open, unfilled gap spanning from 50.38 to approximately 49.88, coinciding with the 50% Fibonacci retracement level. Further reinforcing this potential support zone, the 61.8% Fibonacci retracement is identified at 49.40. Additionally, it is essential to take note of an open unfilled gap spanning from 50.38 to approximately 49.88, coinciding with the 50% Fibonacci retracement level. Further reinforcing this potential support zone, the 61.8% Fibonacci retracement is identified at 49.40. A nuanced adjustment to the Fibonacci retracement, calculated from the lows observed on January 19th to those on January 17th, unveils insightful levels. The initial Fibonacci 38.2% retracement positions itself at 49.98. Aligning closely with the 50% Fibonacci support confluence at 49.40. These intricacies in Fibonacci levels provide a comprehensive framework for assessing potential support zones and aid in anticipating crucial price movements. And before we continue, I just want to reiterate that we plan to acquire the March 15th 512 puts with our stop loss just over the 514.90 level. We'll be looking for the 20-day moving average beginning to converge with the 50 moving average on a 2-minute chart. Now, let us continue with the video. The presence of negative divergence, a consistent pattern characterized by a disparity between relative strength and price, has persisted since December of the previous year. This ongoing divergence signals a noteworthy decoupling between the price movements and the underlying strength or weakness of the asset. This analytical insight spans a considerable time frame, offering valuable historical context for understanding the dynamics at play and facilitating a more informed assessment of potential market trends. What we will be watching for going forward this week is a potential break below the doji's low, and that indicates that sellers were able to overcome the buying pressure that kept the price range relatively tight throughout the week. This could lead to further downward momentum in the short term. And that brings us to a close for this video. However, before we go, we'd just like to mention that if you would like to receive our trades in real time as we make them, be sure to join our Patreon, which you can find at patreon.com/soartrades. Thank you all so much for watching, and if this video resonates with you, be sure to take a moment to leave a comment below and share this video with your friends and colleagues. And don't forget to like the video. Until we meet again.